doctors never pay attention to whether the patient's self-pay or insured because we don't change our recommendations of treatment. What they need is what they need. And then it's up to them what they decide to do. But we diagnose based on what we see and provide the best care that we can based on that observation.
This idea runs counterculture that many people preach in the dental industry right now, which is that the best way to run a dental practice is to get off of insurance and go fee for service.
Right, because the worst thing you want to do is tell someone you have an abscess tooth, you need a root canal, sorry, you can't pay, and let them walk out the door. Obviously, everybody needs to have a profit to be able to pay their employees, but our single focus is focused on our team and taking care of our patients, and we feel the rest will come as long as you make good business decisions and keeping your priorities on the care of the patient.
Hello, everyone, and welcome to another episode of the Dental Truth Project. Very excited for our guest today, but before we get there, we're going to go to the Ask Dallin segment.
Thank you, Ken. Also very excited for our episode today. But our Ask Dallin question is, how do I know if I am spending too much money on my staff? Or how do I know if my staff expense is too high? This is a good question, especially for people that are on the beginning part of their growth journey. It can be hard to peg for any one of your expense categories, whether you're spending too much or too little or what the right place to be is. So generally, we try to think about our expense categories as a percentage of revenue. So it doesn't matter if your staff expenses are $100,000 or $200 or $300, as long as they're good in relation to how much money you're making. So gold standard here is staff expense at about 20% of your revenue. That's like you're knocking it out of the park. Absolutely fantastic. We see average is about 25% or so. So if you're at 25%, there's room for improvement. You're doing pretty good. Anything more than 25%, you should start to think about either how you can leverage those staff members to increase your production, or whether or not you need a smaller team. And this is based on our experience across all of our clients, looking at their P&Ls, the practices that are doing good and poorly, and setting those benchmarks. So 20% is gold standard, 25% is average. Anything less than that or anything more than that, you should be concerned and start pulling some levers. But that's all I got. Back to you, Ken.
Awesome. Thank you,
Actually,
Dallin.
can I add something there?
Yeah, go for it.
So I know I'm the guest, but I actually am an accountant and I get asked that question often, and elaborate a little further as to what you count as staff expenses, not associate expenses.
Yes, that's correct. Not doctors.
Not the doctor's pay, but what about bonuses or payroll tax expenses?
It's a good question. We're including payroll tax expenses and bonuses in that number.
I do as well, but there might be some viewers out there that do not know which accounts to pick up, because there's a few add-on accounts to me that people often forget to add into that percentage.
No, that's a good point. And sorry, Ken, I want to get this from Angie before we go on, even before you've been introduced.
Well, leave it to me, right?
I was trying, hey.
So do those numbers track with what you're seeing across your group? The 20% gold standard, 25% average, anything more than that, red flag. Okay, that's good.
It depends where you research,
others.
but you're in the ballpark of exactly all the articles and sources that I read and follow is generally around, especially now, the 25% since COVID. I feel like the salaries have gone up more to retain staff in the dental field. So, yes.
No doubt. Well, let me go ahead and formally introduce our guest. We're thrilled to have Angie Hopper with us today. Angie, if you would take a minute and just introduce yourself to our audience, and then we'll just jump into talking about your dental truth from there.
Well, I'm Angie Hopper, and I am from West Tennessee. I have a master's degree in accounting, so I've worked in accounting. I started out in public accounting and realized that I like to have a bigger effect on businesses and be able to change things or lead them into a profit mode and grow the practice or whatever business I was in. I have just gotten into healthcare. I worked in healthcare now in dental for over 15 years. So I'm very familiar with revenue cycle management and operations. I've worked as a CFO, HR, COO, currently To me, titles are not as important as actually getting the job done, whatever that may be. My philosophy is if it's not illegal or immoral and something needs to be done, I am happy to help out. I may not know how to do it, but we will figure it out together, because if there's a need, then someone needs to figure it out. So that's always been my approach to dealing with any problems we have, which leads to a lot of reading and studying and investigating. So I feel like you never completely graduate college, because the business world is always changing, and especially in the dental field. And so that's continuing education constantly. And I like to
I'm into
read
that.
and I like to read several different sources of information. I feel like if you only read one, you get pigeonholed into that person's viewpoint. And that's not, what if you're following the wrong path?
Standing. So love to hear from you. What are you thinking about in terms of, building a dental group? What types of challenges are you seeing, or what types of successes are you guys seeing, or things that you've deployed to try to just build out great dental practices?
We obviously, it's the care that we provide to our patients and the empathy and compassion that we have. We want every patient that comes in to feel comfortable. That's both emotionally and physically. So if they're cold, we want to offer them a blanket. We have coffee in our waiting room just to make them feel more comfortable from the minute they walk in the door. We try to have them more relaxed, because a lot of people are fearful of the dentist, and it could have been a past experience, or it's just a mental anxiety. So we try to eliminate that. We have a lot of laughter in our office. We play music, just to try to soften the mood there. So that's part of our culture to our patients. And then behind the scenes, we try to openly communicate with our employees and team members as to things that are up and coming. We try to keep the latest technology that is evolving. We have scanners, now, and where we used to only do impressions. So we have converted to arterial scanners. We are using Pearl AI to help diagnose. It's not a replacement of a dentist ever, but it's a visual that patients can see, that what we're seeing through intraoral pictures, they're able to see the crack in the tooth, or they're able to see the decay in the tooth. So we do try to do that just because it's better patient care. In the back office, our doctors never pay attention to whether the patient's self-pay or insured, because we don't change our recommendations of treatment. What they need is what they need. And then it's up to them what they decide to do from there. But we diagnose based on what we see and provide the best care that we can based on that observation. But we do like for the patients to be able to see it themselves and understand what we see.
So, Angie, I want to jump tracks really quick. And I know Dallin's got a question he wants to ask here, but I wanted to ask you this just because of the deep finance background that you have. If I told you that you could only have one of the three financial statements, so income statement, balance sheet, statement of cash flow, if I told you that every month you could only have one of those, which one would you choose?
Wow, it's hard to say, actually, because I use each one for something different. I'll describe what I would use each one for. So the balance sheet would tell me what our debt or our assets are. And that's more of a historical number, where the income statement, it is a historical number, but it's more recent, whether you're looking at a month to date for the previous month, a quarter to date, or a year to date. But I still have time to change and do something about it. And it tells me what I need to change, where my percentages are getting off or getting too high or too low, the dip in it. And then the cash flow, a lot of business owners do not understand. You can be making a lot of profit, but if you are paying out too much in debt, which is not an expense, it goes as a liability on your balance sheet, you can actually have negative cash flow, yet still be profitable. So far as which one I would choose, I want them all. I like all of them. And the KPI, which is key performance indicators, that I track and monitor, and age and accounts receivable, things like that. I would probably say the income statement for me, though, just because I feel like if I'm producing and making an income, I will eventually work myself out of debt. I don't know. I'm just throwing that answer out there. But if I had to pick one, that I feel like if I'm profitable and watching my expenditures, then the cash flow will follow.
Nice.
What would you pick? I'll turn the question on you.
Okay. So I am a cash flow snob. And so for me,
That was my second choice. I was
Yeah,
almost to that one.
I want to know if I'm consuming cash or if I am generating cash in the business. So I go straight to cash from ops minus capex, and then that tells me what my free cash flow is. So unlevered free cash flow is ultimately my most favorite metric to look at.
Okay. Do you have a different one, Dallin?
I think I might be on your side, Angie. I think cash flow is really important, but the income statement is there's just more information to make use of there. And again, if that's all you're looking at, you can get yourself into a sticky situation. But if you are profitable, then like you said, you can kind of work yourself out of whatever mess you get into. As long as the money is going to come eventually, then you can be successful. But it feels like a trick question because all three of them are necessary. And
Yeah.
they're interrelated and they're informing each other. Like all three need to be viewed in concert in order to successfully run a business.
I agree. That's why I struggled with the question of giving you a single answer to it. Yeah. They did not, by the way, just for your viewers or listeners, I was not pre-framed with what the questions would be. As you could tell.
And to be clear, I just came up with that on the spot as well. So we're all sort of flying from the hip right now.
Yeah. Well, that's what makes your podcast interesting.
Yeah.
And I want to go back, Angie, to something that you said before, because you talked about this idea of in the back office, your doctors are treating and diagnosing, helping patients, regardless of where they come from, regardless of what insurance they're on. Like every human is a human. And the problems are the problems. And we're like, people come in and we're going to do what's right by them. Number one, I love it. I love the idea. I love how human it is. I love how compassionate it is. I love the level of service that you're giving to your communities. But I want to call out that this idea runs counterculture to an idea that many people preach in the dental industry right now, which is that the best way to run a dental practice is to get off of insurance and go fee for service. And you can understand why a dentist would want to do that because lots of payers just have terrible rates or they're difficult to work with. If you're fee for service, your RCM, like all the complications that come with RCM almost disappear. So there's lots of reasons why one would want to, but what it inherently requires is telling some patients no and saying we're exclusive with who we see. There's only a certain type of person that we're going to see in our office, or they have to jump through all of our hoops in order to get treated by our doctors. And I'm not like both methods have pros and cons to them, but I love what you're doing in that you're saying, like, if you walk through the front door of our office, we are going to figure out a way to get you treated and get you
Absolutely.
like give your mouth the health that it needs. I don't know. Do you have any additional comments on that? Because I just love how it's different than what the common narrative is.
I think one, it goes to our owners. When I came there, they have always been compassionate, caring people. We could not have changed and grown, though, if they did not buy into getting into network. So when I came there, I've been there almost 8 years, and they were in network with a couple of insurance companies. And we come to a crossroads because fee for service is promoted so much. And I came from a healthcare background to where we took everything, and I said, if you want to stay smaller in scale, you can do that with fee for service. But if you want to build a family of your team around you and help more families far as financially having a place to work that's a good environment, and also treat more patients for what you love to do, then as times have changed over, more people have dental insurance than what they did 30 years ago. So 30 years ago, especially in the rural areas, mom, pop, smaller farming type communities, not as many people had insurance, and the loyalty to your doctor, whether it be your medical doctor, eye doctor, vet, whomever, you were going to them. That's who you went to. As to me, what I foreseen was a generational change that more people have dental insurance now. It's more common. They need to modernize. They have not raised their fees or the amount they pay, $1,000 or $1,500. So really it's an insurance help plan. It's not necessarily insurance that's going to cover everything. And that's one thing that takes us time to explain to patients to make sure they understand you are allowed $1,000 or $1,500. This procedure is X dollars. Here is what we're showing your insurance will pay. And we have third party ways to help you finance this, or you can pay us direct. If you can't afford to pay, we offer some third party financing, and I negotiate with them, by the way, to get the best rates for our patients and for us, because it's not just about us. I also want my patients to have a lower interest rate to be able to pay that back. But we were at that crossroads. And so we were at 4 op rooms in Jackson. We had a Milan location that had 4 op rooms, and Bell's location that had 11 op rooms. And so we decided that we wanted to care for more patients. That's why I give credit to the owners. It was their heart and soul as to their character that they were willing to not make as much per patient as long as we could still be profitable to care for patients, because that was their calling. And so I respect them for that. So I'll go into how to make insurance successful. But we are now at 4 locations. Jackson went from 4 operatories to 12 operatories now, and we're open 12 hours a day, a couple of days a week.
Nice.
Because we were at capacity, because a lot of dentists don't take insurance, and it's also the care we give. It's not just the insurance, it's the care we give. And then Milan has 10 operatories now. We added a Lexington location with 6 operatories there and spread out because Jackson got full. Even we just built it in 2022, and we had a lot of patients coming from the other locations. So we built a location there so that we could take care of those patients there to open up more rooms in our Jackson location. And
It's amazing growth.
Yeah. So we built Jackson in 2022. We were coming off of COVID. We were going to build in 2021, but that kind of delayed everything, getting products, getting the things you needed with that. So as far as taking insurance, I run some numbers this morning, and we have 80% of our patients have some form of insurance, and there's 20% that are self-pay fee-for-service patients. And we're able to, operate a business and be profitable with that. That's not our goal. I mean, obviously everybody needs to have a profit to be able to pay their employees, but our single focus is focused on our team and taking care of our patients. And we feel the rest will come as long as you make good business decisions and keeping your priorities on the care of the patient. But also, I was going to say the loyalty, though, the first thing people do now on their insurance is say, who's in my network? So I felt like at that crossroads that you're going to have less and less people who are going to stay with you if you are not in network with their insurance. And that has proven to me true based on the statistics I just ran with us having 80% insured patients. We're not in network 100% with everyone. We are it takes 3 pages typewritten to keep them because of all of the leased arrangements now that are out there.
Right.
And if you're not, for your viewers, for the people who don't know, you can join one entity thinking you're just taking that insurance, but come to find out they have 50 other insurances under them. And you are now in network with 50 insurances and not just one. And that was a little confusing at first because they can change those at any time. And so trying to find out whether you're in network with one you don't have a direct contract with is a puzzle to put together. So we keep a spreadsheet on that to compare all the time.
Yeah, you have to.
But that was a kind of our philosophy with in-network. So do you want a patient in the seat that you're still able to cover your costs and perform what you feel called to do of dentistry as long as you're still making a profit to cover your cost? Or do you want smaller scale? And we opted for a growth and larger scale. And I guess it was probably about 1.5 to 2 years after I joined that we really started getting into network. We even treat VA patients. We have contracts with them. And that is one of our favorite things to do is pay back to the veterans. They are so appreciative because there's such long waits at the VA treatment centers to get in. And a lot of them that come in have had substandard care either because it was too far of a drive because it's generally only in larger cities. And we were able to bring that into our community with that. But being profitable with insurance, you still have to manage other costs, even to a higher degree than a fee for service. So we have to, one, negotiate the contracts with the insurance companies, and we can't take everything. If it's going to cost me more in a lab bill than they will allow, that's not a network I can participate in, because I still have to cover all of my other costs and my staffing cost and paying the doctor, of course.
Yeah. So essentially what you're doing, and if you don't mind me interjecting
Go
here,
ahead.
is by choosing not to do fee for service, you're choosing smaller margins. You're going to make less money per procedure because you are willing to accept the insurance reimbursement. And that means in order to have a profitable business, you need more volume, but you can do more volume because anyone from the community or almost anyone from the community can come in and be seen by your doctors. So because it's a lower margin business, you've got to be a little bit more careful with your expenses, a little more on top of things operationally. Everything's got to be efficient. It requires you to be a better business operator, but there is a path there to be in network with all of these providers and still be profitable.
And I'll just add this, Angie, tell me if you disagree with this, but one other element that Dallin didn't mention there was having some type of a payment plan option for the patients that don't have insurance.
Right. Because the worst thing you want to do is tell someone you have an abscess tooth, you need a root canal. Sorry, you can't pay, and let them walk out the door.
Yep.
So we offer third parties, and third party, I'm not recommending anyone in particular, but to give people an example, you have Sunbit, Cherry, Care Credit. There's different entities that will finance, because we're not a bank. We cannot finance for people. But with that, we pay a higher percent than we would on a normal credit card processing fee, plus the write-off from the insurance, which goes back to what you were saying, Ken, that we have to really, I think, Dallin, you said that our margins are smaller. So we have to be careful with all of our other expenditures. And so what I've done is went to some of the services that we offer as third party and negotiated. Like, we're at our size, we're considered emerging DSO size or middle market size, and we were not getting middle market pricing from them. And so that would be my recommendation to your listeners is talk to them, talk to your rep, see what you can work out based on your size and your potential for growth. Because if you don't ask, the answer is always no. So
that's right.
I mean, that's the worst you can get is no. If you don't ask, it's going to be no.
Default position is no. That's right.
No. Right. So we also offer dental membership plans. So for the members that are fee for service that come in, that increases loyalty to us because it is not an insurance. It is a membership plan. They can only use that plan with our office. So we have a child's plan. We have an adult, which is basically just hygiene plan to come in, but then they get 1% off any procedures and a free emergency exam during the year if they needed it.
That's a nice ad. I haven't heard of that one before. That's great.
Yeah. So we offer that when, if we're taking care of their teeth, they're coming in twice a year for their hygiene, then we want to be there for them when they have an emergency toothache of some sort. So we do that. And then we have a perio maintenance plan. So if they have perio treatment, to just try to help them spread that cost out. And what we have found is if they're in some type of membership plan and they're paying for something, they're more likely to come in on their due dates when they're supposed to get the care they need.
It's awesome.
Because if it's like, I got to come up with the money again, I think I'll put that off. And so that goes against our core value and goal of providing good patient care to them. And as far as keeping costs down, if we have time, can I add one more thing to?
Yeah, go for it.
Okay.
This might be the perfect way to wrap things up. It sounds great.
Okay. All right. We were also through our suppliers. We're not getting the best pricing of what larger groups could get. So we joined some group purchasing organizations. And a good example is Synergy, but there's other ones out there. That's just one that comes to the mind that we use. And they negotiate on behalf of thousands of dentists. But I also approached companies directly, the manufacturer. So you have a supplier that comes to you, which is your Binco, Henry Schein, different companies that will come sell you a product, but they represent the manufacturer. So I reached out to the manufacturer reps and showed them our growth numbers and the potential and negotiated special pricing just for our clinic. And then I also joined the group purchasing to get further discounts, for companies I couldn't reach. And we started with a procurement system that allows our team to be efficient. They can type in the product and it has the passwords for everybody we purchase from. And it will compare the cost of that product and any specials like a buy one, get one free or anything going on. It will pop all that up on the screen and you choose who you want to buy from that day because it changes all the time. We could not keep up with all the specials. So that would be my recommendation. If you're going to participate in insurance, you have to control your cost. And to be able to control your cost, you need an efficient way to do that because your team is in a room. They are not, or we hope they're in an op room anyways, right? Or you may be large enough that that's all they do is order, but that gives you a platform to compete with larger industry or larger dental groups and able to get the best pricing for that. And that has really helped to bring down our supply cost. We're still working on it. I mean, it's a work in progress all the
For
time.
sure.
Yeah.
And then of course your lab bill, but we won't go into that because I know we're about out of time, but I just wanted to offer some suggestions on ways to keep your costs down.
Perfect.
Well, I think this is super helpful. And I love the direction this episode took. We started with this idea of the core values of the organization, that we're going to care for every patient that we possibly can. And that informed the business decision that we're going to be in network with anyone that we're not going to lose money on. Like we're going to accept as many insurances as possible. And then that informed, well, okay, if we're going, like we've got the core value, we've made this decision. Now the thing we've got to do to back it up is identify some areas where we can cut costs so that we can still be profitable as an organization. The whole thing flows and it's actually possible to do this. If it's what you want your business to be, it is actually possible to be in network.
Absolutely.
I think that's the right place to land it. Angie, any final thoughts as we wrap up this episode?
You'll regret you asked because I'll always have another comment. Billing is so important when you're in network to keep your revenue coming in, that you either have a core group that bills for you, like that's their job. Because if you try to have them doing this and that, then the billing is going to get put on the back burner, which means your cash flow is going to slow down. So you either need a department that you keep educated and trained up to date on all the code changes every year, what the attachments need to be, or outsource it. We have chosen to outsource it just because of turnover we don't have a lot of turnover, but even one person leaves in a department that's small or vacations, have a baby, life happens. So we outsourced to Daydream Billing, and they've been a great partner of ours. They verify our insurance and they post all of our insurance payments and all of our claims and follow up. So that's one thing we could outsource. We know an exact cost for, and we know it's going to get done daily. So that would be my wrap up that I forgot to include earlier. That is key to being successful as well, is to get your claims out successfully and paid.
Yeah, I'd agree. And I'm glad that we gave Daydream a shout out. They're actually they're how we got connected with Angie in the first place. And yeah, we've heard nothing but awesome things about that organization and have had great experiences ourselves with everyone that works there. So glad we could give them a shout out. And I think that's it. Ken, you want to take us home?
Yeah. All right. We want to again thank Angie Hopper for being our guest today. And we're looking forward to future episodes. And if any of you are thinking about going to the Dykema conference, make sure to get a shout out to Dallin and I, and we'll try to connect up with you there.